International Financial Reporting Standards, IFRS, are a set of accounting rules for the financial statements of public companies that are intended to make them consistent, transparent, and easily comparable around the world. International Financial Reporting Standards, IFRS, were created to bring consistency and integrity to accounting standards and practices, regardless of the company or the country. IFRS specify in detail how companies must maintain their records and report their expenses and income. They were established to create a common accounting language that could be understood globally by investors, auditors, government regulators, and other interested parties. The IRS Foundation is a not-for-profit, public interest organization established to develop a single set of high-quality, understandable, enforceable, and globally accepted accounting standards to promote and facilitate the adoption of the standards. Its trustees appoint members to the IASB, IFRIC, and IFRS AC. They also oversee the regulatory system and raise the finance necessary to support it. It has no involvement in the standard-setting process. The objectives of the IFRS Foundation, taken from its document, the IFRS Foundation Constitution, 2018 are: A. To develop in the public interest a single set of high-quality, understandable, enforceable, and globally accepted financial reporting standards based upon clearly articulated principles. These standards should require high-quality, transparent, and comparable information in financial statements and other financial reporting to help investors, other participants in the world's capital markets, and other users of financial information make economic decisions. B. To promote the use and rigorous application of those standards. In fulfilling the objectives associated with A and B, consider, as appropriate, the needs of a range of sizes and types of entities in diverse economic settings. To promote and facilitate the adoption of the IFSs, being the standards and IFRIC interpretations issued by the Board, through the convergence of national accounting standards and IFRSs. The IFRS comprises 22 trustees from diverse geographical and professional backgrounds. The role of IFSs. IFRSs provide guidance as to how transactions and events should be recognized, when and where recorded. Measured, what amount. Presented, what heading. Disclosed, what information should be shown in the notes to the accounts. In a set of financial statements. For example, IAS 2 inventory states at what amount a company should value its inventory and also requires that the financial statements break down the inventory figure between its components such as raw materials, work in progress and finished goods. If a company follows the relevant accounting standards, its financial statements should show a true and fair view. International Accounting Standards Board, IASB, the International Accounting Standards Board, IASB, is a privately funded, independent body whose primary purpose is a single set of high-quality accounting standards. Developing Financial Reporting Standards, IFRS. We also work with national accounting standard setters, such as the UK ASB, to achieve uniformity of accounting standards around the world. Prior to 2003, standards were published as International Accounting Standards, IAS. Therefore, the term IFRS includes both IFRS and IAS which are still in effect, such as IAS 7 Statement of Cash Flows. IASB members come from multiple countries and come from a variety of backgrounds, including auditors, financial statement preparers, financial statement users, and academics. The IASB is supervised by the IFRS Foundation. IFRS Interpretations Committee, IFRIC, the IFRS Interpretations Committee, IFRIC, consists of her 14 voting members appointed by the directors of the IRS Foundation. The IFRIC has issued guidance on both the application of existing IFRS in corporate financial statements, and the accounting for new financial reporting issues where IFRS have not been introduced. Members have the best technical expertise and diverse international business and market experience relevant to the application of IFRS and report to the IASB. IFRIC has two main functions. Review in a timely manner newly identified financial reporting issues not specifically addressed by international financial reporting standards, and to clarify issues that have resulted or may result in unsatisfactory or contradictory interpretations in the absence of authoritative guidance for reaching consensus on appropriate treatment. International Financial Reporting Standards Advisory Committee, IFRS AC, the IFRS Advisory Committee, IFRS AC, previously known as the Standards Advisory Committee or SAC, is essentially the IASB's consultation committee with the outside world. This is the forum you will use to do this. This will involve consultation with national standard setters, academics, user groups and a range of other stakeholders, ranging from LASB's work program on the development of new IFRS to providing practical advice on the implementation of specific standards. Advise LASB on relevant issues. IFRS AC meets with the IASB at least 3 times a year to present members' views on current standard-setting projects, and to advise the ASB on the IFRS development agenda and schedule.